Hi, my name is Victor Golovtchenko and I'm Senior Editor at Finance Magnates. We're going to discuss a very hot topic in the industry today, and here with me is Yoni Assia, CEO of eToro. So let's start with what is your history with cryptocurrencies and how did you get into this business?
Sure, so we were excited about cryptocurrency very early on. I've been involved in the industry since 2010. We were lucky and smart as a company to buy some Bitcoins in 2011 and 12. We launched Bitcoin trading on eToro in 2013 and the beginning of 14. We were also relatively very early on into Ethereum. We wrote the Colored Coins paper together with Vitalik Buterin, while he stayed in Israel, he actually was in the eToro offices sort of at the same time when he was thinking and building Ethereum, which was sort of the next stage, or cryptocurrency 2.0. And then we actually added Ethereum into the platform early 2017 when it was under $10, and sort of saw the entire sort of amazing growth in the entire cryptocurrency market throughout 2017.
Okay, so this early start for you guys has been material to your success. Was it your instinct? What drove you to cryptocurrencies?
I think I really believe that cryptocurrency is a much bigger revolution than people understand right now. This invention of cryptocurrencies and the blockchain is as big, in my opinion, as the invention of electricity. As big as the invention of computers, it's bigger than the invention of the internet. And the reason is we're redefining finance, almost redefining economics as computer sciences. And this is a huge leap, I believe, in the history of humanity. When people will analyze this era today, this is going to be written in the books of history. So this is, in my opinion, a huge revolution. We're just at the really beginning of it, and it's going to impact basically every single economy in the entire financial services industry.
Okay, so we have, you could say, two types of offerings in the industry. One is based on physical trading of the product, and the other ones are derivatives.
Yeah.
In this case, CFDs mostly. So tell me, what is the model that you have chosen and why?
Sure. So we decided in eToro to offer real cryptocurrency trading. So when people buy cryptocurrency, all of the top 7 cryptocurrencies today on eToro and adding more, we actually buy for them the actual asset and hold it in their behalf. And the reason for it is, first of all, we figured that with the volatility in the cryptocurrency market, leverage is actually too dangerous for people. And if we believe in cryptocurrency for the long term, we want also our users to actually hold it for the long term. And therefore, one-to-one leverage or no leverage is we believe, the right way to trade cryptocurrencies. And second, of course, I think a big part of this revolution is the fact that people can actually hold the assets, that these assets are actually being moved between different counterparts. And throughout the years, we've developed great relationships with the largest exchanges and liquidity providers, and we feel it's important to be a part of this market.
Okay, so you mentioned exchanges, and how do you interface with exchanges? With their infrastructure being drastically different to the infrastructure of brokers,
Sure.
Is this easy to execute?
So it's a bit different than the traditional markets, but we have been, again, operating for the past 10 years in eToro across multiple asset classes. We trade stocks for our users, so we connect to the stock markets and exchanges. We connect to the largest banks. And everything we do is automated. So basically every time you trade on eToro, whether it's an ETF or whether it's Bitcoin or Ethereum, our systems and the backend of our platform actually connects to the markets and trades automatically. In the crypto market, the only difference is instead of being able to work with the largest banks in the world, in cryptocurrencies we work with the largest cryptocurrency exchanges in the world. In the basically trading and settlement is actually a bit more efficient. It's real-time settlement, but obviously credit risk is higher. So it's a bit of a different approach, but we're actually using very similar methodology as we've always done in the stock markets as well.
Okay, so this market has proven to be challenging for some brokers that are offering CFDs and managing risk. What would you advise these brokers to do? Shall they also move on to the physical market, or drastically change their approach to CFDs?
I think the physical market in this specific market is more interesting and a more viable approach than CFDs. I think it's also important for customer behavior to be impacted in the market. So for the market to actually be connected. I think in some cases, some CFD brokers might have not understood that this rally could continue. So people thought Bitcoin at 2,000 going to 5,000, maybe it's the peak. Maybe looked at it more as regular currencies. This is very different. This is a digital gold rush. We're seeing the largest sort of move in a financial asset in the history of mankind.
Right.
People from all over the world are interested in this. So this can easily continue to 50,000 and easily go down to 5,000 or 2,000 back. So I think being a part of the market and connecting the dots and being connected into the blockchain industry is very important if you want to succeed in this space.
Okay, so let's speak about a crucial aspect for clients, and this is security. We have seen some exchanges go bust in the past. Some people say that we're going to see it in the future as well. How do you manage this risk, and how do you ensure the safety of your clients' Bitcoins or Ethereum?
Sure, so first of all, eToro today is a relatively large company. We have about 500 employees worldwide. We have a very large tech team in eToro, about 150 people, which include programmers, IT experts, security experts, and again, we've been in this space for a while, so we understand sort of the pros and cons of where and how to keep crypto safe. I think it's also about the customer experience. A lot of customers want to sort of hold their own cryptocurrency, which makes sense to some more sophisticated customers when they understand how to safekeep their own cryptos and how to manage them. In eToro, we basically simplify this for people and basically do it for them. And generally, we've been here for a while. We're a relatively large company, regulated, of course, throughout Europe and the UK, and always look at our customers' best interest.
Okay, you mentioned regulation, and this brings me to a key aspect of the services of a brokerage, especially a regulated one. What is the percentage of cryptocurrencies as part of your trading volumes? We have seen some regulators introduce caps on the maximum exposure.
Sure.
As compared to the whole book of a brokerage. How do you handle that?
Sure, so today I would say out of the volume in eToro, it's probably about 10 to 15%. I think from a regulatory point of view, we're taking a position to help regulators understand more about cryptocurrencies. I think, again, this technology poses a great opportunity for regulators because traditional finance is very opaque. Like, it's very hard for a regulator to understand what's really happening within a financial institution.
Right.
Like, all of the big problems in finance is always the fact that the regulator doesn't know what's really happening inside a financial institution. But one of the huge opportunities of the blockchain is to enable truly a transparent system where regulators eventually can actually see into the books, into the ledgers of financial institutions, and not only one financial institution, but actually look at the entire industry as a whole. So we've seen a lot of regulation throughout MiFID II coming now in 2018 that enable brokers, sort of force more transparency, more reporting, etc. But I think potentially, a blockchain, a regulated blockchain, could really help regulators understand better sort of the entire infrastructure and the entire sort of financial assets distribution within the ecosystem between financial institutions. So we're trying to work with regulators. Some of them, by the way, are very, very smart. We've seen ESMA publish great papers about the potential of distributed ledger technology. We've seen Gibraltar launch a regulatory framework and are now setting up also a subsidiary in Gibraltar. So we're seeing regulators very interested in this space, and we're trying to help them understand what we do as a company from a practical point of view, so they can understand better both the risks and sort of what's the right way to structure regulation around it.
Okay, and in terms of the social aspect of your offering, when dealing with cryptocurrencies, if you have too many traders that are following a certain recommendation, this could impact the price. So obviously in cryptocurrencies where liquidity is not that high, how is this managed? Do you have any automatic handling of the volumes that are coming?
So first of all, in eToro, as the company that invented copy trading, we actually wrote a couple of patents on how to reduce the friction and market impact in copy trading. Our system basically enables guarantees to clients that when they copy someone, they actually get the same price at the same exact time as that person. And we've built algorithms to enable us to sort of both predict and sort of take that block trade in the market. So again, it's very similar to what we've been doing in stocks and other assets. We just transitioned that into cryptocurrencies. I think the social aspect in cryptocurrency is much more important than traditional securities or traditional currencies, and the reason is this is a social currency eventually. Bitcoin is a currency that was created by people on the internet for the people on the internet. Ethereum is a smart contract platform that was built by the internet for the internet. And I think people show interest, more people show interest, I think, today in cryptocurrency than any other asset, than stocks, commodities, indices, currencies combined. And I think it's important for them to be able to communicate and talk to other people who are interested in those assets. We've seen a huge dialogue, thousands upon thousands of people every day who talk about Ethereum and Ripple on eToro. And we see their questions. They're really trying to bring information from the internet, explain to other people what's happening, and also do it from a global perspective. So it's very interesting also to see people from China or Russia and Europe and Latin America and Australia talking to one another on the same platform, suddenly on one asset that interests everybody.
Okay, so you mentioned for the people, by the people, but then Wall Street comes in and we see the peak in prices on the day of the launch of the futures contract, and then a sudden crash lower on the day on the first settlement of the futures contract. What are your thoughts about this?
I think it's inevitable for Wall Street or traditional finance to eventually go into crypto. I think right now they're sort of tap dancing around it. Everybody's talking about it. They're not sure whether it's, even on their side. Are they saying it's a bubble? But they're all saying blockchain is their future.
Right.
So there's a lot of sort of schizophrenia of Wall Street and the traditional financial institutions around Bitcoin and the blockchain. But I think eventually we're going to see the traditional financial institutions go into crypto. They're simply unable to do this. So if you think about the global brokerage industry, which is relatively a sophisticated and agile industry, also having problems getting into this, wrapping their hands around blockchain tech, think about a large insurance company based in a country, right? So I think it's going to take a bit longer for them to understand that this is truly a new type of asset class, understand how to value this asset class, and decide whether they want to go in for long term. Right now, the majority of money in the world is held via large financial institutions who have basically not even started looking at this, sort of completely dismissed it. What we're seeing is trading desks, sort of the more sophisticated parts in a lot of these banks, a lot of times is the trading desks, and now some of them will get an approval from the CEO saying, okay, you can start trading in crypto just to understand what's happening. But again, when these guys come in, they come in with 50, 100, $200 million. This impacts the market. So I think that's what we're seeing right now is trading houses and trading desks sort of coming into the market, testing it, experimenting it, buying the futures, maybe shorting the futures, buying the long underlying asset, understanding how to deal with the underlying asset, but you don't have still the buy side long part of the financial institutions. So in short, I think it's good Wall Street is coming in. They're experimenting with it, and I think the end goal is for the financial institutions to actually decide to get into cryptocurrencies.
Okay, well, thank you very much for your time.
Thank you very much, Victor.
And have a great expo.
Thank you.